Hey, what's going on, Trap Watchers? Today is September the 14th, 2021. We're going to talk about Let's Talk Money with Joseph Hogg, a CFA. He has a YouTube channel. You guys can see it right here. And he uploaded this video right here on June 16th, 2021, trying to let us know the next Wall Street bets short squeeze stocks that we needed to buy then. Well, guess what? Here it is. September 14, 2021, we're going to look at one of those stocks to see that he mentioned as a short squeeze with the understanding that you're looking for the market to go up. We're going to talk about a small clip. I took a small clip from his video. We're going to listen to what he says. And then as always, we're going to look at the price for this particular short squeeze stock and we're going to break it down. And we're going to make sure that we try to learn from from the information that these YouTubers try to give to us, and kind of let us learn that everything is not always copacetic. You know, everything is not always good. It doesn't matter how much fundamental analysis you try to place into the stock or the company. Sometimes the price just doesn't go the way that you expect it to go. So if you guys appreciate our videos and our content, make sure you hit the like button, share, and also subscribe to the channel, because one of the main reasons why we do these type of videos to make sure that we can try to learn something from it, right? And today we're going to learn that no matter how much information you try to place into your mind about a particular company, about their fundamental analysis, about their anticipation of further growth, it doesn't always pan out in the value of the stock, right? So let's go ahead. You guys can see from this video, he had 113,508 views since this video was uploaded to YouTube, 3.8 thousand likes. So possibly someone took the recommendation that he talked about on this video and actually looked at this particular stock. So let me go ahead and play this clip. I'm gonna play the clip and we're gonna listen to what he says about this particular company. We're gonna talk about what he says about this company. Then we're gonna see if it translates over to the value of the share of the stock. All right, so let's go ahead and do this real quick. Listen to this real quick.
Next on our short squeeze stocks list is OnTrack Incorporated, ticker OTRK, a $617 million AI-powered platform for healthcare and one of the hottest trends right now. The company has just 18 million shares issued, and 95% of those are held by company insiders and institutional investors. That doesn't leave a lot of wiggle room for the short sellers to buy back over 2.5 million shares shorted for about 27% of the float. And now one thing I want you to notice here is this implied shares outstanding. Now it's not applicable here for OnTrack, but it's hugely important for finding these kinds of short squeeze stocks. This implied shares outstanding includes all the convertible bonds and the insider stock options that can be converted into shares. It's a truer count of that potential shares available. So for example, with Pubmatic, ticker PUBM, the company has nearly 50 million shares available if all those convertibles and the options are turned into stock, which of course they will be if the share price increases. That's going to mean the short interest isn't nearly as high as you might think, and the likelihood of a short squeeze is very much lower.
So, I mean, given all that information that he just talked about in regards to shares outstanding and short interest, yeah, that's all good and well, but we need to have something that gives us the advantage over the market, right? We need to have something that places us in a better position in regards to anticipating where price is going to go for the company, right? Understanding and calculating, you know, shares outstanding versus the short interest and how much shares will have to be covered in terms of the short interest. It's all good to know. But that kind of gives you that information overload that I mentioned to you all earlier. Sometimes you just delve into so much information that you are no better in terms of predicting where price is going to go. We need to have something that's a little bit more concrete, something that gives us a little bit more stability and direction in terms of price. All of that he just mentioned really doesn't benefit us in trying to find the best stock to buy, or which one has the better opportunity to move up in price. Not necessarily like a short squeeze to where you expect the price to explode, but at least give us something that will give us a more confirmation that the price is going to go up. All of that he talked about really didn't give us any benefit at all. Now, just for educational purpose, yes, you can understand that information, but how does that benefit us in terms of getting in position and trying to win and anticipate higher price movement for these shares of stock? Let's continue to listen.
It's just something that you don't hear talked about as much, but you need to be watching it if you're investing in these short squeeze stocks. Back to OnTrack though, and besides that strong potential for a Reddit fueled short squeeze.
Now take a look. He's giving us fundamental analysis. He's looking at the earnings, the revenue that this particular company on track makes, right? In persuasion that the price of every share of on track is going to go up. You guys can see it. Quarterly revenue growth, revenue, the income statement, the balance sheet, total cash on hand, the total debt that this company currently has on the books, the book value per share, the current ratio, net cash balance sheet, and triple digit revenue growth. So he's trying to push the notion that on track is going to go up. Let's continue to listen.
We've got some great fundamentals here as well. The company grew revenue by 132% in the most recent quarter to nearly $100 million over the past year. Looking at the balance sheet, OnTrack is net cash positive, which means it has more cash than debt on its balance sheet, almost $43 million in net cash. Now, revenue here is only expected about 2% higher this year to $84 million, but forecast to jump 46% next year to $123 million. That puts the shares at just 7 times on that price to sales basis for a company growing its sales in the high double digits. So with OnTrack, you have a company in one of the best long-term trends out there, virtual healthcare, and being driven by its AI platform. Our shares were already as high as $99 each earlier this year, and I think it gets back there within a few years on that growth, or much quicker on a short squeeze. I put in a call order for 20 call option contracts expiring in August at a $30 strike price for a cost of just under $12,000.
Do you see that? So he put in a call order, an option, expecting the market price in OnTrack to go up about $12,000, right? The expiration was in August 20th, 2021, $30 call. So he's looking for the price at least for OnTrack to go above $30. Okay. Now this was back in June 16, 2021 when he uploaded this video. The call option expired in August. So what we're going to do, okay, we're going to look at the price and we want to see if the price of OnTrack, off of all of that information that he listed and that he said in terms of OnTrack, trying to give us all the great forecasts and the anticipation of the revenue growth and how much money this company is going to make in terms of its healthcare and its AI powered platform. We're going to see the price actually acted the same way in which he tried to drum up the value of this company. So let's go ahead and take a look at this real quick. And I want to show you all how that necessarily wasn't the case. This is OnTrack right here. Okay, do you see that? When he did this video, okay, it was right here on June 16th, 2021. He had a call option to expect the price in OnTrack to go up at least above $30. Well, around that time period, the market completely crashed and went down instead of going up. So all of that information from the revenue growth, from looking and understanding the shares outstanding, from forecasting the anticipation of what this company is going to do into the future, the price still went down 66%. The value of this particular stock still went down 66%. So ask yourself the question, what did I learn? What did I get from the information that he garnered in terms of this particular company when the market decreased in value 66%? The thing that I want you all to realize and understand is that the market does not operate on fundamental analysis. Because if that was the case, everything that he mentioned would have already been priced into the stock. And obviously, the market did not feel that the revenue anticipation growth, that the shares outstanding, how to determine short interest and how much the shorts will have to cover, it had no impact on the value of this stock. Ask yourself the question, why did the stock go down? Because the market does not operate under fundamental analysis. The market only moves off of what you and I are willing to pay and sell for it. That's it. No one can anticipate forecast growth. Nobody can anticipate what the market is going to do for OnTrack in the next 3 to 5 years. Who knows? We have to go with something more upfront to the current time period that we need to anticipate and see what's going to happen. Now, he was looking for a short squeeze. He was anticipating that this value will come back up to that $96 price that he mentioned in the clip. But instead of that happening, we went down instead. So I wanted to come through, give you all this information to try to show you that you might have a lot of people spend, hours upon hours trying to do research, what they term as due diligence, And even in the midst of doing all of that so-called due diligence, you still get these predictions wrong. So what is the purpose? Why would I spend hours upon hours upon hours of doing research only to get the price prediction wrong? Now, granted, he had a call option for an expiration time in August of this year, 2021. So he lost that $11,000 because the price went down instead of going up. Now, I know I'm going to get some comments in the comment section, and I want you all to read these comments because people will come in and try to give him a pass, try to give him, well, he didn't know that such and such was going to happen, or the market didn't anticipate that this was going to happen. Right. It's always after the fact. When you come into the stock market, you need to have something that's going to give you a forecast, something that's going to allow you to predict and anticipate where the market's going to go. He didn't mention whatever these comments might mention on this video that this was going to happen, of course. But you guys can already tell based off the price chart that the market was extremely weak. I mean, take a look at the price chart. Another thing that I want to teach you all is that the price chart does not lie. Look at it. The market in On Track started a massive downtrend once it hit $100. Look at it right here. And it went from $100. This is only a couple of months from February 2021. The market price in On Track went from here all the way down to where we are at now, 88, almost 89%. In a couple of months, from February to September, the value of this stock has decreased. So why would you expect the market to go up as of this particular time? We have seen a monumental collapse of value in this stock price. Why would you expect it to be a short squeeze as of this particular moment? Because of your fundamental analysis? I mean, look at this. The market completely collapsed right here during the week of February 22nd, 2021, and it continues to fall now. Monthly time frame. Look at that. Look at how the monthly time frame ended in February, right here. So again, we need to learn from the videos that we get from these YouTubers in terms of their stock recommendations, because one thing that I've noticed is that these YouTubers only tell you one side of the story, which is the buy side. They always tell you to come in and buy the market, but they never give you the information on when to sell it. Why is that the case? Why do they only give you information as to convince you that the market is going to go up? Why? They never come in and give you the information that, yeah, I'm looking for this value to decrease. Maybe because it's negative. Maybe because they want the views and ad revenue in YouTube, and they know that you'll fall for the positivity rather than give you the negative aspect of these value of these stocks, right? I mean, once this occurred right here, the market was in an uptrend and On Track. We broke that in March. So why would you want to come in and try to expect the price to come back up? It was a breakage, a massive break of that ascending line from February to March. So we had 3.8 thousand likes on this video right here. 113,000 people saw the video. Ask yourself the question, because he also wrote here in the description, these are the next short squeeze stocks on Wall Street bets. And not only could they make you those stock size returns, but they're also great long-term investments. Okay. Long-term. How long is long-term? 5 years, 100 years? How long is he planning on holding this On Track? Because right now it's down 66% in a couple of months. Rather than long-term, it has only taken 2 months, 3 months to see the value of On Track decrease to 66% down. So I'm just saying, we need to start paying attention to learning from the wrong calls that these YouTubers make so that we can become better at our own price predictions and not to be consumed with taking all of this information. And in the end, it doesn't even work out. So all of that information that he did for On Track, was it for naught? What was the point? What was the reason? Right? The reason why you do this analysis and this research is you're trying to corner your premise, your bias as to why that market is going to go up. That is what he did in that clip that I've shown you. He was trying to convince us, based off of the revenue, based off the short squeeze probabilities, based off the future anticipation growth of this AI powered healthcare company, that the value should go up. That was the research. And out of that research, the outcome has been the opposite. So what was the point? Now I know you guys are going to leave me a comment in the comment section and say, well, this happened, or they declared this, or something out of the norm that we didn't anticipate is the reason why the price went down. Right, I get it. You're good to see that after the market has been down, though. Why didn't you tell me that ahead of time? Because if you'd have told me that ahead of time, I would have said, all right, cool, I might just need to wait because I don't see the price going up. When the whole time, the price chart has already shown us weakness the whole time. The price chart doesn't lie. So if you guys don't get anything out of this video, realize that the price chart does not lie. It always gives us the accurate and truest information. And it doesn't require us looking at the fundamental aspect of a company or even how many shares are outstanding. The chart gives us the information that we need. And it's right here in front of us day in and day out without using technical indicators, without doing any fundamental analysis. So now that's it. I just wanted to come in and see what we could get from that little snippet from Let's Talk Money. And let's try to understand that a lot of that so-called due diligence that people try to get you to think that you need to do, you really don't need to do it. You just need to look at the chart, look at the price. Because understand, a lot of these big institutions, they have billions and millions of dollars at their disposal to do that research for us. The only thing that we need to do is come in and look at the chart, because before they even come in and put in a position of a buy or a sell, they have done that research already. And when they come in and actually put on a position, when they actually lay down money on their expectations as to where stock is going to go, it's already here on the chart. This is literally everyone's idea. This price chart is everyone's idea as to what they thought the price was going to do. So why would you want to go in and do other research? It's already out here. The chart is the research right here. It's all compacted in one location, and all we have to do is come in and understand it. It's just that easy. So make sure you hit us up. Tell me what you all think about the price chart and on track, where you think the market is going to go. If you know of any other short squeeze stocks, hit me up. Let us know. Make sure you want to follow us, hit the like button, consider and also subscribe to the channel, because we make this simple and easy. I'll talk to you all on the next one.